Hello everyone, good morning, good evening, good afternoon. I hope all of you are doing good. First of all, I would like to thank all of you for joining in. If you are new to the channel, if you're watching my live stream for the very first time, please make sure to subscribe to the YouTube channel and don't forget to like the live stream. This is really important. We are going to have a very important, very interesting live stream today. And it's very important that if you guys would actually, like the live stream and subscribe to the YouTube channel. If you are not following me over Twitter, you can simply just go to my Twitter handle, which is Sherlock Whale, and I regularly share my updates, analysis, and sometimes calls as well over my Twitter account. And if you would like to have a little bit more organized feed, then what you can do is that you can simply just join the Discord server. The link is in the pinned tweet, and the link is going to be in the description of this live stream as well. You can join the Discord server. And just to let you guys know that we recently started $1,000 to $5,000 challenge. So if you have a small account and if you would like to grow a small account, then you can simply just join the challenge. It's currently around like 7% to 8% up. We recently had a few hits on the challenge, but yeah, we are still like 8% up on the challenge. You can join in the challenge, and you can actually participate in the challenge by joining the Discord server. All you have to do is simply just join the Discord server, open the support ticket, and the support staff, they would be assisting you. You can actually join it for free as well. All you would have to do is simply just create an account on one of our affiliated exchanges, which is going to be either Bybit or Bluffin, right? So you can be a part of the challenge. But anyways, this is going to be a very interesting live stream, because at the end of the live stream, we will also be announcing the winners of the giveaway. So if you have not participated in the giveaway, as soon as the live stream ends, and by the way, we would be announcing the giveaway, close to FOMC announcement, in like 4 to 5 hours. So what you can do is that you can simply just go to my Twitter account, or you can simply just go to Foxian's Twitter account, and you can like this tweet, you can retweet this tweet, and then you can simply just check out these rules, and you can participate in this $200 giveaway. It's a fairly easy process, right? So you can join the Discord server and participate in the giveaway. It's once again a fairly simple process. All right, then let's start the live stream. Once again, all of you, those who are watching the live stream, please make sure to like the live stream. We have 50 plus viewers, but only 19 of you have liked the live stream. So yeah, I would really appreciate if you are able to like the live stream. Okay, so let's start the live stream. I would try my best to keep it an extended one. I would try my best to respond to as many questions as I can, because, I completely understand this is a very important week. This is a very important day. This live stream, it's actually about FOMC, so, lot many things are going to be happening today. So, okay, so first of all, let's take a look at the calendar for this week. It's a very important calendar. It's a very important week. You guys can actually see that we have FOMC announcement at 7 p.m. GMT plus 1. It's my time zone, so it's going to be after like 5 hours from now. So we have FOMC announcement. We have announcement about the rate cuts. We have announcement from FOMC, and then we have FOMC's press conference as well at 7:30 p.m. So it's going to be a very important day. If you guys have no idea about this, please make sure to stay online for that, because once again, it's going to be a very important day. And finally, we would have unemployment claims also coming up tomorrow, Thursday, 19th of September. This was a very interesting week. Yesterday, we had core retail sales data coming up, which was actually positive, and that's why I don't know how many of you actually know this thing or not, but this pump right here, this move from 58,000, 59,000 all the way up to 62,000, 61,000, sorry, $61,500 region. It was mainly because the data, the core retail sales data, it was actually positive, right? The retail sales data, it was actually positive. So that's why we had this move towards the upside. And then we have FOMC today, we have FOMC press conference, and then we have unemployment claims coming up tomorrow, which are not going to be really relevant as of now, because the unemployment claims last month, they were actually the relevant ones. The ones that are coming up tomorrow, they wouldn't really be that much relevant. Obviously, they're going to be relevant for the next month, but yeah, this one, it's not that relevant. But we're going to see some big moves, If you would simply just go to your Twitter account, you would go to your home feed, you would see the discussion going on about if it's going to be a 25 basis point rate cuts, if it's going to be a 50 basis point rate cut, what exactly is going to happen in, if there is 50 basis point rate cut, or if it's 25 basis rate cut. First of all, uh, you know, uh, let's ignore all of these things. I would be talking about the chart part. I just showed you the calendar for this week. It's jam packed, right? Yes, it's a very important day. Now let's quickly talk about the CME Fed Watch tool. Now, this is actually a very good tool. This is actually a very good market indicator if you would like to see that, what exactly market is expecting. So, just an hour or two ago, I actually shared a short trade over my Twitter account. This BTC short right here, the first entry for this Bitcoin short. And although it's a very risky short position, we should be staying away from any positions on FOMC day, generally speaking. But yeah, I'm taking the risk here. The first entry for this short position, it's at 61,800. Right, this is going to be my first entry for this short position, and the second entry is going to be at $63,500 region. The stop loss is going to be a 4-hour candle close above $65,000 region, and then the targets are already mentioned in the chart. You have the target at 57,600, you have the target at this low, which is 55,600, then you have target at this low, which is 52,600, and then you have this last low at, which has been protected as of now, $49,600 region. We will be lucky if we are able to catch this move towards the downside. I would be showing you the complete details. I would be explaining to you everything in terms of chart shortly. But first of all, let's take a look at CME Fed Watch tool. Once again, this is a very important indicator, market indicator, because most of the times it accurately predicts what exactly is about to happen in terms of rate cuts, right? So if you would look at this probability curve, if you look at this probability graph, then you can actually see that the probability, the current interest rates, they are at 5.50%, and market is expecting a 50 to 75 basis point rate cuts. Like you can actually see this thing right here. Market is expecting the new interest rates to be at 4.75% to 5%. And the probability for this is at 65%. The probability just one day ago, it was at 64%. And 1 week ago, the probability was actually at 14%. Now, this is going to be very interesting things. And remember that the rate cuts, they are actually fundamentally bullish. They are bullish in the long term. But in the short term, market may have a slightly different reaction. We have seen this happening in the past also, that whenever there is some good news, market always reacts badly. What happens generally is that the big money, the big players, they would start taking profits, and I would explain all that part later on. But first of all, let's understand that what exactly market is expecting. And by the way, this probability curve or this probability graph, it's continuously being updated. You can actually see that at this point in time, the current interest rates, they are at 5.50%. And remember, this is going to be one of the most important economic events in this whole year for 2024, and market is expecting a 50 to 75 basis point rate cuts. Market is expecting the new interest rates to be at 4.75% to 5%, and the probability for this stands at this moment at 65%. 1 day ago, the probability was at 64%. 1 week ago, the probability was actually at 14%, just 1 week ago. And 1 month ago, the probability was at 25%. So it's very much evident now that market is expecting a 50 to 75 basis point rate cuts. And remember that once again, the rate cuts, the more we have, an increase in this number, it's going to be fundamentally bullish. It's going to be bullish in the longer term. But remember that, if a surprise happens, because market is expecting a 25 to 50 basis point rate cuts, and the probability for this is at 35%. So if I explain it in the simplest possible terms, the probability for a 25 basis rate cuts, it's actually at 35%, and the probability for 50 basis point rate cuts, it's actually at 65%. And remember this thing, that this CME Fed Watch tool, it's a very important market indicator. And what this tool actually does is that it's basically based upon Fed funds futures market, and it's often considered as a very reliable indicator, in terms of short-term monetary policy outcomes. Obviously, it's more accurate in the near terms. For example, in the weeks leading up to FOMC meeting, you would actually notice that the tool is generally quite accurate. because the market participants, they would have already digested a significant amount of economic data. Like you would have the inflation numbers coming up, employment numbers, you would have Fed making some comments, and all of this is priced in already. All of these expectations, they're already priced in. And at this moment also, we can actually see this thing that market is expecting a 50 to 75 basis point rate cut, and it's sitting at 65%. Now, if there happens to be any surprise, if the rate cuts happen to be the actual rate cuts happen to be at 25 basis points, and there is every possibility that market could move towards the upside. There could be a huge move towards the upside. That's my personal opinion. If you would go to Twitter, you would get to hear all sorts of different opinions. Like people would be saying that it's going to be 25 basis points, it's going to be 50 basis points. If it's 50 basis points, there would be a dump. If it's 25 basis points, there could be a pump. But my personal opinion is that since the probability, once again, just like I mentioned, that this CME Fed Watch tool, it's a very important, reliable market indicator because it's based upon the federal funds futures, right? And it's very, very reliable when you would see this in terms of short-term monetary policy outcomes. And the only two instances at which I can actually remember that this CME Watch tool was not accurately able to predict rate cuts or rate hikes. The first one was during COVID-19 crisis back in March 2022, when the Federal Reserve actually made some aggressive rate cuts, and that was not anticipated by the futures market or the Fed Watch tool. That was the first instance that I can, if my memory serves correctly, that was the first instance at which, the CME Watch tool, it was not able to make the prediction correctly. And the second instance was, it was 1994 rate hike cycle, because at that time as well, the Federal Reserve actually surprised the market with some series of unexpected rate hikes. And once again, the market participants, they were caught off guard, and market was not expecting the rate hikes. So at this moment, once again, 65% probability that the rate cuts are going to be 50 to 75 basis points. And, for 25 to 50 basis points, the probability sets at 35%. In my personal opinion, let me just state this thing once again. I'm no financial expert. To be very honest, I'm weak at making financial predictions because I'm no financial wizard, but when it comes to looking at the charts, I have always said this thing during some of my previous live streams also over and over again, that I'm a firm believer of the fact that any information that you would need regarding any particular financial instrument, it's always available right in front of you on the charts, which means that you could be taking a look at the Bitcoin chart and you would be accurately able to predict what exactly is about to happen in the market, because technicals and fundamentals, they go, they were just going be hands in hands together with each other. So in this case, we will be talking about the fundamentals. We will be talking about the technical part as well. But in terms of fundamentals, if there is 25 basis point rate cut, then market obviously is going to get caught off guard. And there could be a huge move towards the upside because market is not expecting this thing. And since the 50 basis point rate cut is already priced in, market already expects a 50 basis point rate cut, then you may see a sell the news event sort of thing, in which price may simply just break below this trend line. There could be a huge impulsive break towards the downside, and we may eventually be going towards 52k and 49k. We will be talking about the technical parts later on. But yeah, in terms of fundamental, that exactly is my opinion. Once again, for those of you guys who are watching the live stream, 50 plus people are watching the live stream and only 31 of you have liked this. So please make sure to subscribe to the YouTube channel and make sure to like the live stream. Once again, going to be a very interesting one. If you would like to participate in the giveaway, all you have to do is just simply go to Foxian.org Twitter account. You can actually follow the account, you can like and retweet this pinned tweet, you can join the Discord server and take part in this giveaway and this challenge as well. Okay, so let's now quickly talk about the technical parts also. First of all, you can, on the 4-hour time frame chart, you can actually see that market has been continuously bouncing off this, price has been continuously bouncing off this trend line. You had the first bounce, you had the second bounce, and you had the third bounce. You had the small break below the trend line. But since that was not an impulsive break below the trend line, so I had no, I did not plan to take the short position. Now, let me state this very important thing. If you guys would go and watch some of my previous live streams, the one that I did a week ago, the one I did almost like 2 weeks ago, you would actually see me talking about this thing. When price was trading somewhere around 52,000, 53,000, Since that time, I have been continuously pointing out the market structure, it's bearish, and there is every possibility that price could go up to 61.5k, 62k region, and that's where you can actually position yourself into a short position. I would explain the reasoning why, but in terms of market structure, you can actually see this thing that we are very much bearish. I would be explaining in detail the market structure part, but first of all, let's try to understand why exactly I'm expecting the price to go down as of now. Let's just keep aside the fundamentals. Let's just forget about the fact that there is going to be FOMC today. Let's just forget about the rate cuts and all these similar things. Let's just entirely focus on the chart part. The immediate thing that you would notice is that price has been bouncing off the trend line on the 4-hour time frame chart, which means that a lot many immatures, a lot many people who are watching this trend line, since they are beginner traders, and I have been mentioning this thing over and over again. If you guys would go and watch the live stream that I did back on 5th of August, when there was a huge dump from 62,000 all the way down to 52,000, at that time as well, I was warning people, during that time, I was warning people not to take a long trade. Although price was sitting on this 4-hour horizontal support, although this was the first retest of that horizontal support, but I was warning people not to take a long trade. Even at that time, the majority of the traders in crypto Twitter space, they were actually saying that it's going to be 65k, it's going to be 68k, 69k, but I was warning people not to take a long trade. The reason for this was solely because price was bouncing off the trend lines, and we know this thing. You can actually go and watch my previous live streams also. We know this thing that whenever price bounces off the trend lines, a lot many people would be looking at this trend line. They would be taking their long positions. They would be placing the stop losses below these lows. You would have stops placed below this low, you would have stops placed below these lows, and below these lows, which means that there are actually a significant amount of sell stops placed below these lows, because all of these are long positions, so there are going to be sell stops placed below these lows. And eventually, if at any point price starts breaking below this trend line, it would take out all of these stop losses, right below this low, right below this low, and right below this low. And this low specifically at $49,500 region, it was not taken out when we had the dump back on 28th of August. But once again, I anticipate that this time, if we happen to get a move towards downside, since the overall market structure, it's being bearish, so I anticipate that there could be a move down towards $49,500 region. It's very much possible. I'm again and again, over and over saying this thing. If you would ask me personally, I'm absolutely always looking at the market structure. In terms of market structure, let me repeat this thing. During the past 8 to 9 months, I have not seen a single instance at which a change of character was not followed by break of structure. And the change of character in terms of market structure already has happened at $56,000 region. When price broke below $56,000 region, that was when your change of character happened. So you have a change of character happened already around here. Let me just quickly mark it. And then you have this region right here, which is basically the major swing low. And then you have this next region, which is basically the major swing high. The only concerning thing as of now is that you have two equal highs sitting around here. We know that, all those people who would have taken their short positions looking at these equal highs, they would have already placed their stop losses above these highs, which means that once again, there are going to be significant number of buy stops placed above these highs for all these short positions. So there is every possibility, in terms of when you would play by the book, there is every possibility that price could simply just wick above these highs, take all of these buy stops, and then it could simply just move towards the downside. But, even if we look at price currently sitting at $60,000 region, and that's going to be almost an 8%, 9% move up to $65,000 region. I don't really imagine that there could be such a big move, even if it happens to be a surprise, even if it happens to be a 25 basis point rate cut. Even in that case, there could be a move like, the initial move could be up to 2%, 3%, 4%, because we are completely ignoring the fact that, there is FOMC and there are rate cuts going to happen. The initial upside move, it could be up to 3%, 4%. I would be explaining to you why exactly I'm saying this thing, because this $61,800 region, this $62,000 region, it's a very important region when you would look at certain important confluences. But first of all, You have trend line, which is actually pointing out to you that a lot many people who have taken their long positions, they would have their stop losses placed below these lows, which means that if price starts breaking below this trend line, all of these sell stops, they would be taken out. So there is going to be a sort of chain reaction. All those people who have their long positions, they would start panic closing their long positions. These people, they would start getting liquidated. These people, they would start getting stopped out of their long positions, which means that all of these long positions would be getting closed, which means that this selling would be taking place, and there could be a chain reaction happening towards the downside. So please be very much prepared for this thing. If there happens to be a chain reaction, if price starts breaking below this trend line, and I can actually see this thing, I'm anticipating this thing, that there could be a small bounce off this trend line and there would be a break, violent break, impulsive break below the trend line. If you doubt this thing, you can actually see this example right here. Price broke below the trend line. I can show you multiple examples for this. This was a trend line, price broke below the trend line. This was, in this case, price did not break below the trend line, but this another example, you had first move, you had first bounce, second bounce, and third bounce, and finally price broke impulsively below the trend line. You have another example of this, and then you have another example of this, you have another example of this, another example of this, right? Another example of this, another example of this. So I can show you multiple examples. Like, just go and open up the 1 hour time frame chart or 4 hour time frame chart, and you can actually see this thing yourself, that whenever price starts forming these kind of trend lines, it's very obvious, it's very logical that all those people, they would be looking at this trend line and they would be taking long positions, placing the stops below the lows, and eventually price would start breaking below, taking out all these sell stops, right? So there could be a chain reaction happening. So that is my first initial understanding about what could be happening in terms of initial volatility. Now, why exactly I'm interested in this 61.7k region or 62k region or 61.8k region. Why exactly I'm interested in this range right here? It's fairly simple, because if you guys would look at the market structure once again, you had this first change of character right here, right? This is a major swing high, this is a major swing low. I know that some of you may be confused, hearing about all of these terms for the very first time. What you can do is that you guys can actually go and watch some of my previous live streams, and you would get an idea that how accurate market structure actually is in predicting the next moves. So in this case, it's serving as a very predictive indicator, and you can actually see that the change of character has happened. And if you would look at the price action, if you would backtest the price action for the past 9 to 10 months, almost like 1 year or so, you would notice that every change of character, it was followed by at least one break of structure, and a break of structure would only be happening if market breaks and closes below this major swing low, which is at $52,600 region. And if price breaks above $65,000 region, if we break and close a 4-hour candle above $65,000 region, then obviously the whole market structure would once again turn towards bullish. So in terms of order flow, I'm saying this statement back again, in terms of order flow, we are very much bearish. I said the same thing when we were trading somewhere around 52,000, and I mentioned this thing that we could go up to 62,000, we could go up to 63,000. Why? Because generally this is a retracement wave, right? This is a retracement wave. Generally speaking, whenever you talk about the retracement waves, all you have to do is just take out your Fib tool, draw Fibonacci retracement from the start of impulsive wave to the end of impulsive wave. Since this is a downtrend, so this would be your impulsive wave. This is your major swing high, so this is your start of impulsive wave, this is the end of impulsive wave, and you can actually see that market perfectly reacted at 65% Fib level. That is usually the region where I'm always taking the short position, and this region was perfectly aligned with this yearly VWAP on the 4-hour time frame chart. So that was a very good short position. I did not take that, but once again, price had a quick bounce of this quarterly VWAP on the 4-hour time frame chart. And you have MTF EMS sitting around here. And by the way, these indicators I have developed myself. If you guys would like to have access to these indicators, if you guys would like to have access to the script, all you have to do is just simply join the Discord server. The link is going to be in the description of this video, and the link is also going to be pinned in the pinned tweet over my Twitter account. All you have to do is simply just join the Discord server, open a support ticket, ask for this script right here. You can actually see this thing, that how exactly market reacts to these lines. You had moved towards the upside, You had the first rejection, you had the second rejection, then price quickly bounced off this quarterly VWAP, had rejection of the yearly VWAP, and absolutely this MTF 200 EMA has been absolute good thing in predicting the market reaction at this area. You had the bounce here, you had the bounce here, you had rejection around here, you had bounce. So yeah, it's actually a very good indicator. But just focusing on this part right here, in terms of order flow, since we are very much bearish, all you have to do is just take out your Fib tool, draw Fibonacci retracement from the start of impulsive wave to the end of impulsive wave, and expect the market to give a reaction somewhere around 65% to 70% Fibonacci level. And you can actually see that 65% reaction happened, 70% reaction also happened. But I have my stop loss placed, I have my entry placed for this position at 75%, right, which is basically a quartile point as well. So if I just open up quartiles for you guys, you can actually see that we have a quartile sitting at 75% level. Now if you guys have no idea about quartiles, I would try to explain this in the upcoming live streams, but you guys can actually see that market is usually reacting to these quartiles, like 75% or 25% quartiles. For example, if we consider this move towards the downside, let me open up a blank chart for you guys so that you are able to understand what exactly I'm talking about. Let's open up this blank chart right here. So if we go to the daily time frame chart, and if I show you this thing, let's first of all start with this all-time high. So you had an all-time high forming at 73,000, then you had price bottoming somewhere around 60,000. If you would draw the quartiles, you can actually see that market had reaction at 70%, 75% level. Then once again, if you would look at this move right here, market once again had reaction at 75% quartile. Once again, if you would look at this impulsive move, impulsive bearish wave towards the downside, market once again had reaction at 75% quartile. Or you could say that, you could argue that market was precisely reacting at 88% Fibonacci level, 88.6% Fibonacci level. Once again, if you would draw this, draw your quartiles on this impulsive wave towards the downside, you can actually see this thing that market had a perfect reaction, near perfect reaction at 75%. The previous reaction at $65,000 region, it was precisely because market reacted at 75% quartile. So in this case as well, the only problem is that all the previous situations that we considered, there was a lower low. For example, this low right here, it was lower than the previous low. This low right here, it was lower than previous low. This low right here, it was lower than the previous low. This low right here, it was lower than the previous low. But in this situation, this low right here, it is higher than the previous low. So, that's the only confusing part, to be very honest. If you would draw the quartiles, considering this bearish move towards the downside, you would notice that we have not seen a reaction happening at 60-75% level. So there is every possibility that if there is any surprise, or even if there is no surprise, market could have an initial move, 2%, 3% move towards the upside, going up to the 75% quartile, and then you would have the initial move, then you would have the subsequent move towards the downside. Now, even if you would consider this previous quartile right here, this move right here, this bearish move towards the downside, even if you would draw your quartiles, you can see that market had a near perfect reaction at 75% level. Then it came down to this 25% level, which is once again another quartile. And once again, it's bouncing off again and it's forming this new quartile. So there is every possibility that we could have a reaction up to 61.8K level. It was a big bet. It was a risky decision for me to not bet at 65% level, to not bet at 70% level, but actually wait for market to react at 75% level. We have missed the first two reactions. I intentionally did that. I just wanted to, take a risk-free trade. I wanted my entry point to be near perfect. So in this situation, we will be lucky if we get to see a wick up to 75% level, which is sitting at 61.8K to $62,000 region. We will be very lucky, right? Because, if market straight away starts breaking below this trend line, then we will not be able to catch this move, because it's going to be a very impulsive move towards the downside. Because at the end of the day, if you would look at this chart right here, we have to take out these lows. We have a low sitting around here. We have a low sitting around somewhere around 55,000. We have a low sitting somewhere around this area. We have a low sitting around somewhere around this area. And if you have any confusion looking at these charts, you can see the very similar pattern playing out on the Sol chart. You had price bouncing off, bouncing off, bouncing off, and once again you had three bounces off this trend line. Finally, price breaks below this trend line, comes back, gives a retest, and just takes out this first low, takes out this second low perfectly, and is about to take out these two lows as well. So a similar thing you can actually notice on the Ethereum chart also. Very similar thing. You had the first bounce, you had the second bounce, you had the third bounce. Finally, price breaks below the trend line. You had price, taking out this low right here, once again taking out this low right here, and is about to take out this low sitting at 2239, and will be eventually taking out this low, sitting at 2151. Okay, so it's a very predictive pattern. It's a very logical pattern because it's not based upon any bullshit. It's simply just saying that all those people, it's simple logic, right? All those people who are building up their long positions looking at this trend lines, they're going to be retail money, right? They're going to be simple, just some immature, some beginners. So they would eventually be getting stopped out, liquidated. They would, market would eventually turn back, break impulsively below the trend line, and it will try to take out all of these sell stops placed below these lows. And there is a growing anticipation in the market that the market makers, they already had built up their positions down from 52k, down from 53k, and since it's a very priced in thing, since it's going to be a very priced in event, so eventually it will be a sell the news event, because 50 basis rate cut. And I mentioned to you that there have been only two instances during the past 30 to 40 years at which the Fed or the CME group was not able to precisely predict the market reaction, or was not precisely able to predict the interest rates. In this case, it has always been able to precisely predict the future interest rates. So at this point in time, there is 65% probability that there is going to be a 50 basis point to 75 basis point rate cuts. And it's very much likely, once again, I'm saying this thing, it's very much likely that the 50 basis point to 75 basis point rate cut is going to happen, which could be bearish, which could be immediately bearish, right? But we always should be having a plan B. In this case, the plan B is that, if we happen to get a 25 basis point rate cut, and if market fails to react somewhere around in these regions, I would simply just try to cut my short position, because I don't really want to take any risk. Even if you would look at the market structure, you would notice this thing immediately, that the change of character has happened. This is a major swing low, this is a major swing high, which means that ideally speaking, theoretically speaking, this change of character should be followed by one break of structure. When would a break of structure happen? Only if price breaks and closes below $52,600 region. That's the ideal case scenario. But we know that market, could just pull out some unexpected moves as well. In this situation, the unexpected move could be if we happen to get another change of character. That's going to be a very surprising thing for me, to be very honest, because I have not seen a single instance at which market deviated away from market structure during the past 1 year or so. But eventually we should always have a plan B. And in this case, the plan B is going to be, if price starts breaking above $65,000 region, we would eventually know that, the change of character has once again happened. Price is now once again bullish, and we should be building up a long position. We should wait for price to retrace back a little bit. We should wait for this initial volatility to subside a little bit, and then we would start building a long position. And then, we would simply just target the next regions ahead at 73k, 74k. It's always a bad idea to stick to one analysis. It's always a bad idea to just stick to your opinion and, not having flexibility in your opinion, right? I could simply just say that since my TA is saying, since my analysis is saying that eventually we have so many confluences, like we have this trend line information, we have like, VWAP sitting, this yearly VWAP sitting around here, we have quartiles sitting around here, we have the market structure being bearish, we have 65%, 70.5% Fibonacci levels sitting around here. So there is every probability that market would be going down to 52k, 53k. But even in that case, I have a perfect flexibility in my opinion, which means that if market starts breaking above, see, I'm not here to make any predictions. I'm here to just look at the chart. So if I get, if market proves me wrong, then it's perfectly fine, because, I don't have anything to do with the market. I'm just here to trade the market. I'm just here to make money at the end of the day. I'm not here to make my predictions accurate. I'm not a magician, right? I'm not here to make people think that, okay, I can make correct predictions. I'm here to make people realize that, okay, I'm a profitable trader and I can make, money from these moves, right? which means that I have a perfect flexibility in my opinion. Yes, there are 80 to 90% chances in my opinion that market should be breaking down below. If there happens to be no surprise, which is a very much likely sort of thing, if market simply just breaks below the trend line, there is every possibility that we could be going down to 52k. At least in theory, that's what should be happening. But if we break and close a 4-hour candle above $65,000 region, then the whole market structure, it would once again turn towards bullish. And we would simply just have to change our opinion back again, and we would have to cut our short position. But there are few other charts also that we can take a look at. For example, USDT dominance chart, which is inversely correlated with this Bitcoin chart. We could be taking a look at BTC USDT.3L chart and BTC USDT.3S chart. Let's see that what exactly is the opinion looking at the rest of these charts, because as soon as the announcement happens, what I would usually do is that I would have all of these three charts open right in front of me on three different monitors, and I would be looking at these three charts because all of these charts, they are somewhat perfectly aligned with each other. Now this is going to be a very interesting opinion. This is going to be a very interesting view. So stick with me towards the end of this live stream as well. If you guys are watching this live stream, and if you have not subscribed to the YouTube channel, please make sure to do so. What time announcements for the rate cuts? It's going to be at 7 p.m. as per my time zone. I am in GMT +1, so you can simply just open up this website, Forex Factory. You can go to the calendar part, and you can actually simply just filter out the most important events, and it should show you your time zone, right? What time zone you are in. So as per my time zone, it's going to be at 7 p.m. GMT +1. You can calculate it as per your time zone. You can actually see this thing that the current interest rate is at 5.50%. Market is expecting, as per this forecast, a 25 basis point rate cut. But if you would go to the CME Fed Watch Tool website, market is expecting a 50 basis point rate cut, and there is 65% probability for that to happen. And then there is 35% probability that there could be a 25 basis point rate cut. Okay, let's see what happens. This is once again going to be a very interesting day. And remember this thing. There will be volatility. There will be a significant amount of volatility tomorrow as well, because we have unemployment claims coming up. Obviously, it's not going to be too much relevant, but you would have two very important days. You would have two very important days of volatility. And if you want my personal opinion, and if you want an honest opinion, you should simply just try to avoid the market. Just simply try to backtest your strategy. Just simply just try to digest all of this information. Watch these live streams. Start to develop a basic understanding of what exactly is happening, because at the end of the day, let me say this thing back again, that in my personal opinion, every information that you need regarding any particular financial instrument, it's always available right in front of you in the charts. So no matter what the rate cuts, no matter what the decision is about to be, is going to be about the rate cut, in my personal opinion, all the information that you need is available right in front of you in the charts. And the information we have already looked at all of that information, this trend line information. You have a significant amount of resistance in terms of the ELD VWAP sitting around here, and then you have a quartile sitting around here. Then you have a significant amount of other indicators pointing out that there could be a move towards the downside. But please do not forget, it's not always a good idea. I don't want to have an analysis paralysis here, to be very honest, because if you would look at a few other indicators, few other dynamic lines, like exponential moving averages, you can actually see this thing, that price is very much sitting on all of these important 4-hour period exponential moving averages. Like even if you would go to the daily time frame chart, we are precisely sitting on quarterly VWAP on the 4-hour time frame chart, which is sitting somewhere around $57,300 region. And then we have a daily period exponential 200 period moving average, which means that it's a very confusing state as of now. And if you would like to be safe, simply just stay out of the market. There is no need to take any extra risk. There will always be days when you can simply just predict the market. As of now, remember this thing, you are going to be trading against people who have billions of dollars in capital, and they can simply just manipulate the market in seconds. Okay, so there is no point trying to risk your capital, trying to trade, trying to catch the correct move, because it would simply just be gambling, because anything could be happening in this moment. But still, I would take this short position. I would try to risk this short position. It's a big bet, it's a risky bet, I would try to rely on the chart part. I would simply just not focus on what exactly is happening in terms of fundamentals and the rest of the things. Okay, so now let's finally take a look at USDT dominance chart and BTC USDT.3s chart. And before I do that, let me just take a look at the questions that you guys have dropped in the chat box. Please watch the live stream till the end, because we have two very important charts to look at. I would just simply have a quick overview of these charts, but before I do that, I would first of all look at any questions that you guys may have. Anything that you would like me to talk about, any question that you may have, simply just drop it in the chat box. How long the effect of this rate cut would last? It could last for almost like this week, for next 2, 3, 4 days. When you say risky, do you mean it's a big loss or that it's not likely to profit? No, I don't really mean that. I mean to say that it's a big risky trade, which means that there is like 70-30% probability. 70% probability is in our favor, which means that market could simply just be going down, and 30% probability is that market could simply just go in the opposite direction. And when you have such probabilities like 70-30 or 60-40% probability, then you should generally avoid the market, and it's still being labeled as a very risky position. Until and unless when it comes to me, I am usually going with the system that has 90% or more than 90% probability in my favor, as per my scoring system, because I have a very set scoring system based upon which I usually take the trades. How does the DXY chart compare against the BTC one, and what's the theory behind it? I'm not usually looking at Dixie. I'm not usually looking at dollar currency index chart, to be very, very honest, because I have a few other indexes to look at, few other indices that I'm always looking at. Many people compare it with S&P 500, Nasdaq chart also, NQ charts also, but usually I'm not looking at the stock indices. I would only be focusing on the USDT dominance chart, BTC USDT.3s chart, BTC USDT.3l chart, because see, the only problem is that all of these charts, they are directly correlated with the Bitcoin chart. When you would compare it with the dollar currency index chart or S&P 500 chart or Nasdaq chart, they will be indirectly related with the Bitcoin chart. And remember this thing, that this correlation coefficient, this correlation values, they're always evolving, they're always changing. Just to give you an example of this, the correlation between S&P 500 and the Bitcoin chart, it used to be a negative one, meaning that there was a negative correlation. They used to move in the opposite direction almost like 4 years ago. And during the past 2 to 3 years, we have seen that the correlation value, it has been positive, and it has been at high positive around 0.56, which means that the two charts, they are very much positively correlated. So in my personal opinion, there is no point looking at the currency indexes. Instead, what we should do is that we should be looking at these charts that are directly correlated with the Bitcoin chart. Like we have USDT dominance, we have BTC USDT.3s, we have BTC USDT.3l chart. And the only problem is that if you would look at too many charts, you would have the analysis paralysis. Once again, I simply just want to avoid that thing. What are your settings for that tool you used? I simply just use the Fib tool, but if you are looking at the settings, it's simple. I have 0 level turned on, I have 1 level, I have 0.75 and I have 0.25. This is simply just Fibonacci tool. Do you mean at news release that the price will immediately go down, or will there be a pump first? We cannot anticipate this thing, to be very honest, because I don't know if it's going to be a 50 basis point rate cut, or if it's going to be 25 basis point rate cut. In my personal opinion, if market gives you a surprise in terms of 25 basis point rate cut, then there could be a move towards the upside. Initial move towards the upside, it could last for next few hours, right? But if you happen to get 50 basis point rate cut decision, then there could be an immediate move towards the downside. But in any case, we will be focusing on the chart part. Since we are focusing on the chart part, I will anticipate that market moves in our favor first. Market tries to go to 75% quartile, which is sitting at 61.8k, or if we are lucky enough, there could be a wick up to 61.8k, 62k during the initial volatility phase, and then market could move towards the downside. But in any case, the dominant direction remains 62k. And if you guys would like to hear my fresh opinion on all of these things as the announcements are being made, just simply go to my Twitter account, or simply go to the description of this video join the Discord server. That's where you're going to find me for the rest of the day, for the rest of the time. I would be sharing my live analysis, and possibly I would be doing a Discord live stream just for my Discord members during FOMC as well. We would be looking at all of these reactions live. And by the way, those live streams are going to be completely free. You can join the Discord server, you can participate in the live streams. They are completely free. They are for the public members. You don't have to pay anything for watching the live streams that we get, that we do daily, every single day in the week in our Discord server. And why at 25? Do you think that the previous high at 61,150 has any chances to already be the liquidity we are looking for market going downwards? Yes, there could be a possibility that this is actually the high, because if you would draw fib levels, right? Let's just completely forget about the rest of the things. If you would look at the fib levels only, let me just look at the fib levels. You can actually see this thing that this market is usually reacting at 65% Fibonacci level. And remember this thing that I mentioned, 65% Fibonacci level, or I mentioned $61,000 region almost a week or two ago, when price was trading somewhere around 52,000, 53,000. At that time, I clearly mentioned that there is every possibility that we could have a move up to 61k, 62k, because that's where 65%, 70.5% Fibonacci level is sitting. Now, if you would look at this area around here, the 65% level has already been tapped, and usually market only taps 65% Fibonacci level once, which means that market could simply just move towards the downside without giving any significant reaction. So it's going to be an interesting thing. I don't exactly know what's about to happen in terms of fundamentals, but in terms of technicals, the 65% fib level has already been tapped. Our safest bet may have been to simply just trade the 65% Fibonacci level. Could have been to simply just take a short position at 65% Fibonacci level, completely ignoring the rest of the noise. But I would still place my bets. I have still placed my bets at 75% fib level, because I just wanted to give some room for volatility. The only problem here is that we don't have any room for volatility if we simply just open a short position at this 65% Fibonacci level. Because if there happens to be a good news, then there is every possibility that you could have a 3%, 4% move towards the upside. You could have announcement, and then you have the FOMC press conference as well. Fed will be doing a press conference. So during the presser as well, you could have a decent amount of volatility. So there could be a wick up to this area. All I'm relying on is actually the wick part. So there could be a wick up to 75% level. Let's see what happens. We are still just making some anticipations. Okay, so I see that makes sense. So you are saying because the correlation coefficient changes throughout time, it's not as reliable as necessarily something you would look at. Yes, that's exactly the right thing. When you would talk about the stock indices, Nasdaq, S&P 500, DXY, since the correlation coefficient, it's always changing. It's never really constant. When you would compare it to the other indices, like the direct correlations that has with USDT dominance, BTC USDT.3S, BTC USDT.3L, these are the only ones that are directly correlated with the Bitcoin chart. Total 1, total 2, total 3, or Bitcoin dominance, they are not directly correlated with the Bitcoin chart. Like, they are not directly predicting the Bitcoin movements, but these three indices right here, they're directly predicting the movement. So that's why it's much more feasible, in my opinion. It's much more reliable to look at the crypto indices instead of looking at the stock indices. Many people actually do this thing, but I don't do it, okay? Because in my opinion, since they have a very indirect correlation, so it's not really a good idea. Let's take a look at a few other questions. Alpha is saying, thanks bro, great analysis. I have been following you since May 2023. Thank you so much, bro. Thank you so much. 2 p.m. Eastern Standard Time. Yes, that's going to be the time when the announcement is being done. Don't forget to like the live, guys. Yes, please make sure to like the live stream. There are 50 plus people watching the live stream. Please make sure to like it. Sherlock, you trade commodities or stocks or only crypto? No, I only trade crypto. Sherlock, you will let some runners until 43k to 39k? Yes, most definitely. I would have a small part of my position open till 43k, 44k, because I still expect market to go down to that point. It could be a very far-fetched idea. I have been greatly criticized for this thing, that it's once again a very far-fetched idea if market would go down to 43k, 44k, but still, I have a decent amount of expectation that, in a longer run, we could have a move towards 43k, 42k, because rate cuts, they may sound like a bullish thing, honestly speaking, but, historically speaking, they may not have been too bullish. So even if it's a 25 basis point rate cut or 50 basis point rate cut, it's not fundamentally a very good thing. Why? Because theoretically speaking, they may sound like a good idea that rate cuts are about to happen, like the inflation is reducing, but it's also pointing out towards the constant fears of recession. It's also pointing out to the fact that market is already priced in. Market was already expecting this thing to happen, and that thing has already happened, which means that the big players, they may simply just be cashing out their positions. And it's my personal belief that the initial move that we saw happening towards the upside, that was simply just market makers building up a decent amount of long positions, creating a decent amount of FOMO in the market. And already the retail traders, since they saw this big move towards the upside, they started panicking. They started thinking that, okay, maybe we're going to move towards 68k, 69k, 73k. They did not want to miss out on this move, so they started building up their long positions, right? And since we know that that's how basically liquidity works, if market makers have to open up a decent amount of big enough short positions, they need to build big enough long positions from the opposite side, and only then they can open up their short position. Only then they can actually sell their positions. And that's very much my understanding. Obviously, you may not have proof for this. You cannot have any proof for this, but that's my initial understanding, that this move towards the upside, that was only to create a FOMO in the market. That was only to create that was only to make retail traders panic open some long positions so that they don't miss out on this move. And now the big money, they're simply just cashing out their positions, or they're simply just going to take profit on their positions, because remember that this 52k area was where the majority of the people actually sold their positions. I know people who did not have positions worth like 100k, 200k. I know people who had positions worth millions of dollars and who panic closed their long positions around 52k, 53k. So you can imagine that there was a sense of panic around 52k, 53k region, which means that the market makers, they were actually successful in doing what they wanted to do. They made people panic close their long positions. They made a significant amount of people do the selling part, so that they were able to open up their buy positions, right? And exactly we saw what happened next was price moved from 52k all the way up to 61k. So this move downside, it could simply just be to make the retail traders FOMO into their long positions, so that the market makers, they are able to cash out, or they are able to sell their positions, sell their long positions, and open new fresh short position. That's what exactly is happening in my opinion. I could be wrong. There is no proof for this, but yeah, that's my initial understanding. Once again, is the indicator free? Yes, the indicator is free. I would not take any credit for this. I had the choice to simply just publish the indicator on TradingView, and then people could simply just DM me asking for the request, and I could simply just give people access through the TradingView terminal. But once again, if you would request for the indicator, I would simply just share the script with you guys. You can copy and paste the script in your TradingView terminal, going into Pine script somewhere around here, and you can simply just call it your indicator. You can simply just sell it as your own indicator, right? But yeah, it's just completely up to you. That would be a dishonest move at your part, but in my at my part, I'm giving you free access to it. You can just use it. You can simply just copy paste the script, and you can choose to give the credits if you want to. And since it is FOMC now, a lot of people expecting bullish, and we are shorting. Yeah, I wouldn't really say that people are actually bullish. There are a lot of conflicting opinions in the market. Is the 49 to 43k then another change of character? It's going to be a break of structure. If price breaks below 52k region, it's going to be a break of structure, and the next moves obviously are going to be predicted by the next waves. Remember that market, I said this thing when we were trading at around 52k. I exclusively mentioned this thing, that if you imagine that market would simply just go down, or if you imagine that market would simply just go up, then that's not really how market reacts. Price is always moving in terms of waves. There are no charts that go straight up. There are no charts that go straight down. Market would always be moving in terms of waves. So you would have an impulsive wave, ideally speaking. This is an ideal case scenario. So you had an impulsive wave, then you would have a corrective wave which is going to be up to 65% fib level, then you would have another impulsive wave, then you would have another corrective wave, then you would have another impulsive wave. So there is every possibility that we could have a move towards 43k looking something like this. So you would have another break of structure when price breaks below 52k. Possibly market would take out this low right here. It would once again make people believe that it's going to go up. It would start building up. People would start building up, and there's some long positions. But remember that whenever you are trading, remember to always look at the trend. If you are trading against the trend, then you are definitely not going to win. So instead of catching this move right here, instead of just trying to trade this move right here, why not simply just trade this move right here, in which all you have to do is take out your fib tool and draw fib retracement, start of impulsive wave, end of impulsive wave, wait for market to get to your point of interest, your zone of interest, build a short position, and enjoy the impulsive move towards the downside. That move is not going to give you much profit, but this move definitely is going to make you profitable, because this is an impulsive move, and this move could happen at 65% level. This move could only end at 38% level, only at 50% level. So there is every possibility that even if you enter into a long position, you would end up losing into this long trade, because since this is a corrective wave, so you cannot precisely say that the move is always going to happen at 65% Fibonacci level. It could simply just end at 38% Fib level also. So the best possible decisions whenever you are trading is to trade in the direction of the trend, so that you are able to catch this bigger move. So even if you are able to catch this move somewhere in the middle of the trend, you would have the assurance that price is going to go down, break below this low, since this is a bearish wave, or since this is a bullish wave in the case of a bullish scenario, right? Okay, so I guess I would now be looking at the USDT dominance chart, and then I would be looking at the the other few indices like BTC USDT.3s and BTC USDT.3l chart. If you guys have any other questions, you can simply just drop it in the chat box. Once again, make sure to like the live stream, make sure to subscribe to my YouTube channel, make sure to follow me over Twitter, make sure to join the Discord server if you would like to have a little bit more organized feed. We regularly, have every single week we have these Discord live streams done by the other analysts. So yeah, you can join the Discord server in order to just take part in these live streams and hear a slightly different opinion. I would try my best to have another live stream today, specifically organized for the Discord server members. So if you would like to watch me, it's going to be completely free. All you have to do is simply just click the link in the description of this live stream, or simply just click the link in this pinned tweet, join the Discord server. You can actually see that we have so many things going on. We have this challenge going on, $1,000 to $5,000 challenge. It's currently sitting at like 8%, 7%, 8% up. The challenge is at. We are still trying to play a little bit conventional on the challenge part, but yeah, you can take part in the challenge. All you would have to do is simply just be a premium member, or you could alternatively join in the challenge for free. All you would have to do is simply just trade on one of our partner exchanges using our affiliate link. That's all you would have to do in order to take part in the challenge. And you can also join my mentorship program, the details for which you would simply just find by joining the Discord server. You can open up a support ticket and you can personally learn from me one-on-one lectures in which we provide access to all of these things, all of these details, all of this data, all of these indicators, resources, recorded video lectures in 4K with captions, with everything, and access to live lectures also, and access to live guidance as well, obviously. Okay, so let's quickly talk about the USDT dominance chart. This is a chart that is negatively correlated with the Bitcoin chart. Okay, if you would look at this chart right here, you would notice that you have a decent move toward the downside happening. I would not focus on the the complete external structure, because in my personal opinion, that's very much irrelevant, because many confusing things are happening in terms of external structure. So let's just focus on the immediate structure part right here. You would notice that you have a move towards the downside happening, right? As soon as we hit this resistance area right here, you had the impulsive wave, corrective wave, impulsive wave, corrective wave, impulsive wave, corrective wave, and there is every possibility. If you would look at these waves right here, this was your last wave, by the way. If you would look at these waves right here, there is every possibility that market could once again go up to 6% level. It's sitting at 5.9% level. It could still once again go up to 65% level, but you can precisely see that how these reactions at 65%, 70% levels actually happen. And then there is, on the 4-hour time frame chart, quarterly VWAP sitting around here. Now, the way these charts actually perfectly work in a correlation with each other is that you can see that on 16th of September, price hit this 65% fib level and the quarterly VWAP on the 4-hour time frame chart, which indicated that the USDT dominance should be going down, right? The USDT dominance should be going down, and then you had on the 4-hour time frame chart two equal highs sitting around it. Once again, pointing out that price on the USDT dominance chart should be going down, which obviously meant that price on the Bitcoin chart should be going up. And what happened was price on the Bitcoin chart exactly hit this area right here and it started going up. And you know what region it was hitting at that time? This quarterly VWAP on the 4-hour time frame chart. Price hit this quarterly VWAP and price bounced. So both of these charts, they were perfectly correlated with each other. Now, if you would look at BTC USDT.3s chart, that chart also at that time was not just hitting into quarterly VWAP, but also yearly VWAP on the 4-hour time frame chart. And if you would draw once again the fib levels from the start of impulsive wave to the end of impulsive wave, price was hitting into 61-65% fib level. So all these three charts, they were perfectly aligned with each other. But let's quickly focus on the things that may happen today. First of all, USDT dominance. It may once again bounce towards 65% fib level, right? That's where a decent reaction could be happening. That's where price, we have a resistance area somewhere around here, right? If price bounces off a little bit, you need to be careful because, price on the Bitcoin chart, it would go down a little bit. It will break below the trend line, and you need to be cautious as soon as USDT dominance hits this resistance area. So that's why I'm saying that if as soon as the FOMC announcement happen, you should have all of these three charts open in front of you. So ideally speaking, on the Bitcoin chart, price should go down a little bit and go down to this support area at 57,700. That's where actually you should start cashing out your short position if you already have any short position built up. What you can actually do is that you can open up a hedge position, a long position and a short position at the very same market price at 59,500. So you could cash out your short position at this area somewhere around here, which has a strong support on the Bitcoin chart, and on the USDT dominance chart that has a strong resistance, where you can expect USDT dominance to take a rejection, where you can expect the Bitcoin chart to take a bounce. And then you can keep your long position open and wait for price to go up a little bit, wait for price to give an initial move towards the upside. Because if you would look on the 1-hour time frame chart, if the impulsive break downside happens, there is every possibility. And by the way, price on the 1-hour time frame chart is sitting on the quarterly VWAP. So if the break below happens, this area right here, it's not just a 4-hour time frame quarterly VWAP, but it's also the 1-hour yearly VWAP. So the break below happens, you would wait for price to hit this area, you would close your short position, and then you would wait for price to come back up a little bit. On the 1-hour time frame chart, there is every possibility that there could be a fair value gap imbalance. Wait for price to get to that imbalance or fair value gap. Once again, close your long position, build a short position, back again, place your stop, a protective stop loss above this high right here, and then simply just pray that price goes downside, in case the data is, slightly bearish. The statement happens to be in our favor, like a 50 basis point rate cut, because in that case, no matter what happens, even if there is a huge move towards the downside, please do not panic. Please do not think that, okay, we are not going to have any other chance, because in my opinion, even if the volatility happens initially towards the downside, since there is going to be a significant volatility on the 1-hour time frame chart, every possibility there is that there could be significant amount of imbalances left behind by the price. So we could make use of these imbalances. We can take another short position, placing a stop above these highs, and then we can target the next regions ahead. But overall, if you would like to play slightly more cautious approach, if you would like to have a little bit more cautious approach, if you love your capital, if you cannot manage all of these positions, if you do not understand what exactly is a hedge position, how to manage hedge positions, then you should simply just avoid all of these things. Just sit back, relax, go through all of these live streams of mine. There is tons of important information in these live streams. You can simply just watch these live streams, make notes. You can join the Discord server, hear the opinions from other analysts, join those live streams, request the script for this indicator, just backtest some of these things, just backtest this data, try to digest all of this information, spend some time with your family, and then simply just take a small break. Yeah. So that's it for today. If you guys have any questions, make sure to drop it in the chat box. I would maybe take like 2-3 more minutes to respond to any questions that you guys may have. The trend line is already getting break. Yeah, you should actually be looking on the 4-hour time frame chart. Let's see what happens. But we still have 4 hours. So let's not get ahead of ourselves. Let's just simply wait for the announcement to be made, and then we can start expecting what happens. Do you enter with same position and entry in DCA? Yes. That's a very important question. I enter with the same position size. Usually, other analysts, other people, they may have a slightly different approach, where some of them might be using different position sizes. But in case I have 3 entries, I would be using 33.33% at every single entry, which means that the same position size at the DCA, same position size at the initial entry levels. Really recommend the Discord server for everyone. The free is awesome already. The premium, it's fucking A. Yeah, I definitely recommend the Discord server. If you're not in the Discord server, please join the Discord server. You would find an actual value in the Discord server. Like, you would get to talk with the analyst. You would get to, just hear different opinions from the market analysts and everything. Titan is also saying, yeah, the Discord is great. As always, love the unbiased charting. Thank you so much. Thank you so much. It's completely just an unbiased opinion. As of now, I'm bearish, but I would quickly change my opinion once again. Just like I mentioned at the very beginning of the live stream also, I'm not a magician. I'm not here to make any accurate predictions or accurate predictions or any such thing. I would simply just go with what exactly is being visible to me on the charts, what exactly is the information being presented to me in terms of charts, right? So potentially short-term bearish, but longer-term bullish going into Q4. I'm not thinking about all-time high. I'm not thinking about the long term. I'm not thinking about the Q4. I have said this previously as well, that I consider myself a trader, more of a trader and less of an investor. I'm not concerned about if we are going to make an all-time high. I'm less concerned about if we are going to 100K or 150K or $500,000. I'm more concerned about if we are going to break above 65K or if we are going to go down to 52K. If you are a trader, you simply just play level by level. You are less concerned about the rest of the things, right? Once again, I consider myself a trader. I do not consider myself an investor because that's a totally separate thing. So for me, there is no point saying that in Q4 we will be bullish or we're going to go down to 42K, 43K. I would simply just be focusing on 65K and 52K for now. I could simply just come here and say that, okay, there is going to be an all-time high in Q4. But there is, by the way, I already actually did a live stream based upon pure technical analysis, based upon pure fractal approach. If you guys would like to hear my opinion about the all-time high and all those things, you guys can find out that video. It was a very interesting live stream. And in that live stream, using purely technical approach, using purely, market fractals, using fib levels, I tried to predict, or I tried to forecast where exactly the next all-time high for Bitcoin could be. Okay, I cannot predict the temporal part. I cannot predict if it's going to be happening in Q4 or in the first quarter of 2025. I cannot predict the temporal part, but I can definitely predict that, or I can at least try to predict that or forecast that it could be at 100K or 120K or 150K. As long as a rate cut ends up in a soft landing for the economy, I would imagine, yes. What indicator do you use for scalping? I am not really a scalper. I use the very same approach for scalping as well. The very same things for scalping. I'm not using any market indicators. Like, the indicators that I have applied to the charts, they are usually for the higher time frame charts, 4-hour time frame, and, the daily time frame charts. I'm using a very limited set of indicators, and they are just to, assist me in doing, some day-to-day tasks. At what time you will be streaming later today? At 2 p.m. Eastern Standard Time in the Discord server, at the time of FOMC. Do you enter with same position? Yes, I have already answered this. What does BTC USDT.3S and BTC USDT.3H charts show? I actually just mentioned this thing. BTC USDT.3L chart, it's very much similar, looking very much similar to BTC USDT chart, actual Bitcoin chart. You can expect the price to bounce as soon as it drops to this support area right here. But the BTC USDT.3s chart, it might be looking slightly different because we already had one break of structure around here. So you can simply just take out the fib tool, try to draw the fib tool from swing high to swing low, and you can expect the price to hit this 65% fib level, and that's where price could be bouncing off the Bitcoin chart, because since it's going up, price on a Bitcoin chart would be going down. And once again, it's presenting the very same opinion that Bitcoin is going to have an impulsive break towards the downside initially, and price may bounce off this area right here. Price may just simply take out this low. Price may simply just take out the stops placed below this low, and bounce off this quarterly VWAP on the 4-hour time frame chart. And on BTC USDT.3s chart, it may simply just have a strong rejection of this 65% fib level. And on USDT dominance chart, it may have strong rejection at this quarterly VWAP region on the 4-hour time frame chart. It's going to be very interesting if all of these things, they perfectly align with each other. Yeah, if Dan, I completely understand this thing. If you are more interested in knowing my personal opinion about all-time high and all that, please, I would really recommend watching this live stream that I did almost like 3 to 4 weeks ago, and it was purely based upon the technical approach. So you can go and watch that one. Sherlock, why you are bearish on market? Please entertain my question in detail. Love your videos. IK, I have already just explained the whole reasoning. I've already explained the complete logic. You can watch the live stream from the very beginning and you can get an idea about what exactly I'm talking about. It's because of structure. It's because it's mainly because of the structure part, because just like I mentioned that, if you would backtest the data for the past 1 year or so, you would notice that, the market structure, it has been fairly accurate in predicting the future price action. So in this case, market structure, it's very much bearish. Every change of character is almost always followed by one break of structure, and a break of structure would only happen if price breaks below 52.5k without breaking above 65k. And price had to have a strong rejection from this area right here, which seems to have already happened, which means that there is every possibility that this is actually the decisive move, right? I still I'm actually feeling a little bit of a regret that I did not open a short position at this 65% Fibonacci level. I should have done that, because I have been teaching the very same thing. I've been telling the same thing to all the people, but I still actually managed to, place a short limit order at this 61.7k region. I'm still expecting that during the volatility phase of the market, there could be an initial upside move, and during that, we will be triggering these 61.7k, these 61.8k orders. Although I'm not really sure if the initial move happens to be towards the downside, then there is every possibility that we will be getting a strong front run on these limit orders at 61.7k. I mentioned that I had the choice of placing the limit orders either at 65% fib level or either at the quartiles that are sitting at 61.7k, 61.8k. Price hit 61.2k, 61.3k region. It did not go up to 61.7k, but let's see what happens. It really depends on the, even if we get a front run on these orders, I would wait for the break below. I would wait for a limited amount of time, for price to leave some fair value gaps, like imbalances somewhere around here, and based upon those things, I would place maybe another short position, placing my stop above these highs. That's going to be an extremely risky position, because almost a suicidal position, because during volatility these stops can be immediately taken out. But yeah, if price gives first the move toward downside, then I would have to change my limit. But I'm still praying, I'm still expecting that the initial move happens to be towards upside, triggering our limit orders, and then the move toward the downside happens. Let's see if it's going to be an upside move first or if it's going to be downside move first. Oh, you're going live during FOMC? Nice. Yes, but only for the Discord members, right? So if you're not in the Discord server, please make sure to participate. What are your opinions about TRU? We are not really thinking about the rest of the altcoins. We are simply just focusing on Bitcoin as of now, since the rest of the altcoins, they are simply just going to follow. But yeah, I would share my analysis on TRU in the live stream, because if we happen to do the live stream during FOMC, we would have plenty of time, so we can look at some other altcoin charts. Sherlock, will you be updating the Discord members who cannot watch the Discord live stream if any changes to our short position? Yes, I would definitely do that. I have the obligation to do that, sir. So I would definitely do that. So I guess that's it for today. That's it for today. I hope you guys enjoyed the live stream. If you guys would like me to watch, if you guys would like to watch me live during FOMC announcements and all those things, you can simply just once again join the Discord server and we can have a nice chit chat there as well in the Discord server. So I really recommend you join the Discord server. And there is a competition going on in the Discord server as well, in which you have the chance to win easily $200, $300. There are $1,000 in terms of giveaway for all the members. So you can join the Discord server and participate in the giveaway, and you can also win the free premium membership. You're going to be looking for more setups today? Not really. I'm not looking at the rest of the altcoins. I'm mainly focused on Bitcoin as of now. There is no point looking at the rest of the altcoins because the volatility is going to be at peak. So I don't want to open too many positions. Much appreciated, brother. Liked and subscribed. Thank you so much. Thank you so much. That's it for today. Join the Discord server and we will be having another live stream in 4 hours from now, exactly at 2 p.m. Eastern Standard Time. It's going to be free for all of you in the Discord server. Join me for the FOMC and we will have a nice chit chat. Make sure to like the live stream. Make sure to join the Discord server. Make sure to subscribe to the YouTube channel. That's going to really motivate me. That's going to really help us a lot because, more and more people would be able to watch these live streams. More and more, people would be able to benefit from this. If you're not following me over Twitter, just simply follow me over Twitter and, like and retweet the pinned tweet. Join the Discord server. Take part in the challenge. Thank you so much. Take care and have a great week ahead. Thank you. See you guys in 4 hours in Discord server.